Tom, great to have you with us.
Yeah, great to see you.
You know, we were talking about Russia, Ukraine at the top of the show, but this sort of folds in. It's all the markets. Is the reopening and the strength of the possible reopening, is that sort of offsetting any sort of downside action we could be seeing from the impact of war?
I mean, to an extent, yes. I think there is pent-up demand because, for the last 2 years, people have been home and there's been a lot of anxiety. And I think, even Starbucks had noted there are more unhinged customers. So I think as masks come off and we move away from pandemic thinking, I do think businesses start to see workers come back, business travel comes back, and I think it is all a virtuous circle. But I think the bigger sort of reason markets are stabilizing is very likely because the Fed, which people thought was turning quite hawkish, ends up having to make, I think, an incrementally dovish pivot.
A dovish pivot meaning to 25 or even more dovish than that?
Yes, to 25. I mean, and I would just say it's as Tom Luddy, former JP Morgan vice chairman, likes to say, less bad is good. And I think if the expectation has gone from 50 basis points to 25, I think that is incrementally dovish.
Hey, Tom, it's Karen. Thanks for being on. So if they were to proceed in that dovish scenario of 25 and several 25s, what's your outlook for the market then and the economy?
Well, and as that chart shows, the market expectations have dropped sharply. But I think that the question we'll probably ask at the end of this year, and that's a long ways away, is whether, a 2% 10-year or even 2.25 is bad for risk assets or even bad for the economy. And I think markets will probably conclude that it's still supportive of PE expansion. And that's because today you'd still be paying a 40 multiple for a 10-year bond, and investment grade is still going to be in the 30s and high yield is going to be mid-20s. So equities, which are now sub 20, still look like a pretty attractive investment bet. And of course, that also feeds into the idea that if rates are rising, you're not going to make money on credit, but you'll make money in equity. So there's a guaranteed TINA.
How much, Tom, do you think market participants are underestimating the strength of this reopening? And I'm asking this because I feel like every step along the way, people have been skeptical of it. You've been pretty bullish, and your view has largely turned out to be right.
I think investors are still have low conviction on reopening, and that's because when they talk about supply chain glitches or inflationary pressures, they tend to think of it as margin pressure for stocks that are reopening. So I think there's a tendency to think the durability of any rally is short-lived. I mean, you could see it in the way stocks really sell off on any word of inflation. But it's not that different than how investors were extremely skeptical of energy stocks in 2021 because they didn't think energy would be around. But even in 2022, energy has been performing pretty well.
And before we let you go, Tom, I got to ask you about Bitcoin. That's part of your beef trade, although it's Bitcoin equities. I'm curious, are you surprised at how Bitcoin has traded? I would have thought that with the onset of the skirmish, the war going on in Ukraine, that Bitcoin would trade higher, not because it's a safe haven at all or a store of value, but maybe for other reasons, like the notion that there needs to be an alternative payment system developed and other ways to move money around the world other than traditional means.
Yeah, I mean, I think it depends on your measurement, where we start to measure performance. But I think over the weekend, there were several things that made Bitcoin quite useful, right? We know that the Ukrainian government, the prime minister, was actually making requests for donations in crypto. And with the SWIFT actions, we know Russia, I mean, if you look at the ruble exchanges, Bitcoin volumes were through the roof. So in times of uncertainty and when essentially access to traditional financial systems gets cut off, people do turn to crypto. I don't know if this was the moment Bitcoin had to go parabolic, but I think it's really showing its use case again. And I think Bitcoin equities, so the B is Bitcoin, the E is Bitcoin equities. They did quite well today because, again, U.S. mining is really moving into the U.S. So I think Bitcoin equities, especially whether it's Silvergate or the miners, are actually turning to equities that could actually boost performance in a portfolio.
Tom, thank you for your time. Good to see you.
Thank you.
Tom Lee of Fundstrat. Pete, how are you playing reopening and/or Bitcoin?
Well, Bitcoin obviously has become front and center. The one thing, Mel, I just want to pivot somewhere. Sorry, I know you asked that question, but what I'm curious about, and I'm just and I'm having trouble with this. You know me and how long I've been talking about oil and energy, and I continue to talk about it. And Tom's talking about it even more aggressively than myself. I don't understand why that's not some sort of a headwind for his bullish case. Because I think as we watch oil and we watch energy, and he's talking about, looking at certain levels and it's pricing in as if oil's trading at 50 right now versus the OIH and all the rest of what he's laying out there for energy. It just makes me wonder, how can he be so bullish on the broader market? I would think that would be a definite headwind, not to totally stop the markets, but to slow it down. And so I'm just a little bit puzzled by that. I understand his point and where he thinks the markets are going. He says we've already hit a low. I don't know that we've hit the low yet either, Mel. So I love what I hear from Tom, but I just sort of question a few of those things as we're thinking about it. As far as crypto, it's an interesting thing how now all of a sudden it seems to be so accepted that people are trying to figure out all these different ways that they can move the dollars around. I think it's actually should be something that really does boost up crypto, I think, over the next several months.
Pro tip, turn your ringer off when you're on live television. Tim Seymour. I don't know if you can hear it over there.
Is there an Apple I could
quickly, have we hit the lows, do you think?
No. And I think this is a tremendous opportunity for traders out there. I think there's a ton of volatility. I still think we are in a downward trend. I think there's very little, I agree with a lot of what he had to say. I also think about a world where everything that's happened in the last couple of weeks is inflationary and a headwind to growth. And the Fed is hiking into this. And this comes out of a period where the Fed, gave away 25% of U.S. GDP to people for free. And that's run out. So, that's my bigger term. I think there are great opportunities. Look, the reopening trade to me is where you should be amongst other places, including a Las Vegas Sands, which I talk about, U.S. banks, which I think are overdone, certainly over European banks, especially, again, as rates start to drop. It's terrible for EU, let alone their Russia exposure.